Hi, everyone, and welcome back to another episode of the Democratic Constitution podcast. I'm really excited today to be talking with Dr. Leah Downey, and we're going to focus on Leah's book, Our Money, Monetary Policy as If Democracy Matters. And we're going to get into the book, talk about monetary policy, the Federal Reserve, and then also get into questions of democracy, what a more democratic monetary system would look like, what even is democracy, so on and so forth. But first off, thanks so much for coming on. I was hoping you could introduce yourself, including your political development and how you became interested in questions of democracy and power.
Yeah, definitely. Thanks for having me. I'm very happy to be here. I'm from North Carolina, and now I live in the UK. And my education has kind of been in both places. So I started my undergraduate degree. Well, my first undergraduate degree was in math, and that was my real passion. But I decided I wanted to study something that would be a little bit closer to people, right, and people's lives. So I was encouraged to add economics as a second degree, which I did. And I found it completely fascinating, but in a sort of disgruntling kind of way. I found economics to have a strange relationship between its topic and its methodology. And in my last year as an undergraduate, I did a very close reading with a close advisor of mine of Schumpeter's Capitalism, Socialism, and Democracy, which I just found completely fascinating. So from then, I ended up getting a master's degree in economics and philosophy, and then finally ending up getting my PhD in political theory. So pretty much I was studying more or less the same thing the entire time, but through three different approaches throughout my sort of my education, I suppose. And um, that's allowed me, I think, a degree of latitude that some other academics don't have, which has been useful. Because, as you say, what I'm really interested in is democracy and power and money. And I've always been fascinated by sort of the kind of big questions of why we organize our collective life in the way that we do, and how we relate to one another, and how do we decide what's permitted and what's required, both in a moral sense, but also in an economic sense of uh, how do we decide what we produce and reproduce, and in the world that we share. Yeah, so it's been useful for me to get those three different perspectives on that question.
Yeah. Well, those concerns around democracy, power, people's lives, that really comes out. I would imagine that the world of finance doesn't necessarily ask these questions around, well, where does the power lie? Who makes the decisions? So on and so forth. So your work, I would imagine, is really bringing that into a lot of these discussions.
Yeah, I mean, part of the book is a plea to political theorists to pay more attention to these matters, right? I mean, uh, it's a hard ask in some ways because a lot of people find them difficult to engage with, either because they don't have the sort of, or they feel they don't have the economics kind of chops to dive in, which I feel is regretful, because some of the questions that political theorists would be most insightful in addressing are parts of the economic sort of structure that you need to have least technical knowledge, I think, actually to engage in. But anyway, they seem to be sort of put off by the technicality, or there's a certain type of discussion I feel like sometimes around these things where there's a difference between, say, what the textbook says and what the policymakers say, or what the student learns in economics 101 versus what sort of they say, oh well, that it's not really that way, that kind of thing. And that makes it difficult at times for, I think, other disciplines to engage. But that, as I'm sure we'll talk about more, I mean, at the core of the book is just this like insistence that if what you care about is democracy, you've got to care about money and credit, because it's a huge, huge part of how we decide what gets produced and reproduced in our society. And I think you can't pull those things apart.
A large section of your book focuses on the U.S. Federal Reserve, though, as we'll get into, it doesn't stay U.S. specific, your book. I was hoping you could give us a layperson's introduction to the Federal Reserve and that particular world of money that you're looking at.
Yeah, definitely. Well, you could give like a million versions of this, and all of them would be distinct, and they would all be fascinating. So if I talk for too long, just tell me to stop, and we can move on. But the Fed is the central bank of the United States, obviously, and its full name, right, is the Federal Reserve System. And we think of it today properly as the public body in charge of monetary policy in the US, right? So when I say monetary policy, what I mean is the regulation of money creation. Okay. So that means that the Fed itself can create money, right? And decide when and on what basis to do that. But it also regulates private money creation. So when private banks engage in originating credit and distributing it, they're doing that under the umbrella of the Federal Reserve's both sort of supervision of banks, but also regulation in the sense of interest rate policy is meant to change the incentives that private banks have when they make decisions about credit creation and allocation. But it's worth saying that even though this central bank is the public body in charge of monetary policy in the US, it's also somewhat odd in that uh, it's it's not how we would imagine a public body in charge of something like that to be designed if we were thinking about how it would be designed today, right? And this isn't to say it's odd in that it's unique. The Fed is unique vis-a-vis other sort of central banks. Most central banks started as private institutions and then were made public, and the Fed is pretty much like that. So the Fed started as a public-private institution, and it still is a public sort of private institution, although we think of it today as primarily a public body. But it's important to remember that, as I said, the Fed is the Federal Reserve System, and that is a system of 12 regional reserve banks, right? So these are banks that are placed all over the country that are parts of the Federal Reserve System, and they are privately owned corporations. They're owned by the private banks that are in their region. They pay dividends to those private banks that own them, and those private bankers, some of them sit on the board of the Regional Reserve Fed, which makes choices about who the next president will be, and so on and so forth. So the Fed has this network of privately owned regional reserve banks. It then has this more public capstone organization called the Board of Governors, which sits in DC. And these are the 7 people that we think of when we think of the president appointing someone to the Fed and the Senate confirming them, right? So we've heard a lot about Jay Powell in recent weeks in the news. He's one of the members of the Board of Governors. Now, the other institutional body that one should keep in mind when they're thinking about the Fed is what's referred to as the FOMC. And this is the Federal Open Market Committee. And this is the body that we think of as really making decisions about monetary policy. And the FOMC is made up of the 7 members that are on the Board of Governors that I just mentioned, the sort of appointed by president, confirmed by the Senate people, and the regional reserve president that comes from the New York Regional Bank, and then 4 rotating regional reserve bank presidents. So the other bank presidents from the other 11 regions rotate through as voting members of the FOMC. And they make choices about monetary policy. I mean, as I mentioned before, the Fed attempts to secure price stability by adjusting interest rates, and it does this by altering the payments that it pays on its reserves to private banks. And that's the kind of monetary policy decisions that are made by the FOMC. But it's also, of course, a major player in the world of, say, banking regulation and supervision. That section of the Fed's work is not really the focus of my book, but I also think it's important to mention because you can't really pull apart bank regulation from monetary policy in a certain sense because you're adjusting bank incentives when you're engaging in regulating them. So that's a first go. How does that?
No, I think that gets into the various pieces, the various people involved, regions, so on and so forth. One thing that stood out to me around this question of democracy and deciding who gets to make important decisions and so on is that the governors, the 7 governors, as I understand them, are, as you said, nominated by the president and then confirmed by the Senate, the same way, for example, that we get the Supreme Court justices. And I'm sure there are other institutions that are escaping me where the leaders are elected in that particular way. But I was curious if you could unpack this idea, getting into the democracy aspect of your book, that important monetary, in this case, monetary decisions should be left in the hands of experts who are protected from politics. And I think another way you could say that is unelected, but protected from the messy political world, to perhaps use the framework that those folks are thinking. And then just to tie it together, that idea, as I said, is within the Supreme Court, within the Fed's 7 governors. But how does that fit into the world of money?
Well, two things. Well, we should come back to that comparison because it's a common one between the Fed and the Supreme Court, and I think there are some real important differences there. But just to answer your specific question about expertise, so there are quite a few different ways that people commonly defend central bank independence, and they're often kind of they're similar arguments, and they're sort of mushed together and not carefully applied in a general sense, which I think is a problem because it allows people to be a bit slippery when they're defending central bank independence. But in general, people would say one of a few things. They would say, okay, well, monetary policy is not like other areas of policy. It's either too important or it's too complicated to be left to politicians to deal with, or it's unique in the way that it relates to time, right? And this is the sort of most common defenses you'll get, is that it's called time inconsistent, right? And what that means is that what looks like a good policy in the short term is actually a bad policy in the long term. And so to commit to good policy, we have to kind of insulate this policymaking power to people who understand that, and not politicians who are going to be inevitably short-termist, right? And because of the regular election cycle. Now, in the book, I take apart all of these arguments individually and show that, in my view, at least, none of them are as strong as people seem to think they are, and to use them as if they are in the literature and in popular discourse. And, we can go into the detailed claims of why I think that is, but just sort of most broadly, I think the idea that monetary policy is importantly distinct from other areas of policy, when you're looking at it with your sort of democratic lens on, democratic glasses on, just can't be defended, right? So if you claim that monetary policy is too important to be in the hands of politicians, then I would ask you why that's not true for the nuclear codes, right? If you claim that it's too complicated, then I would ask you why that's not true of fiscal policy or environmental policy. And if you claim that has this kind of unique relationship to time, then I would say that, again, why is that not true of all these other areas of policy where you can easily imagine examples where there is sort of a short-term policy solution that might look good right before an election, right? Like slashing taxes, or going into a war or getting out of a war, or a certain immigration policy that in the long term probably might have very bad results, and we just depend on, even insist on, having that argument politically, right? So if somebody gives a suggestion that is a bad idea in the long run, you would expect an opposition party to point that out and make that argument, right? That's sort of the way that we're assuming democracy is going to work. And so there's this argument for expertise that just doesn't seem to me to work here. Now, another way to put it, which actually there's a recent article in the New York Times by Janet Yellen and Ben Bernanke, both former chairs of the Fed, who claim, well, we need insulation so that we can conduct monetary policy according to the data, right? It's all about being scientific. And again, I think that this argument is misleading because it suggests that one, what is right from a scientific perspective, even if we could kind of define that, which I think is actually much more difficult technically than is suggested, but what is right from a kind of scientific perspective and what is of political interest necessarily come apart, first of all. And then secondly, that you need insulation to execute what is sort of good policy as technically defined, right? So why would we want this special insulation in the case of monetary policy, but not insulation of experts, again, in environmental policy, in education policy, in any of these other areas? And it just seems to me that that this kind of insulation argument can't be defended well from the perspective of the arguments that people use in favor of central bank independence, that those arguments aren't particularly strong. But then also on the other side of things, and this is the other part of the book, that the argument against central bank independence from a democratic perspective is itself actually quite strong. And so what you see is that the arguments for CBI, central bank independence, are pretty weak, and the arguments against it are pretty strong. And that's kind of the structure of my argument in the book.
And I think you also give examples or go into how the Fed can play a particular political role, or there are political outcomes that could be seen as advantageous for the Fed. So it's not as if these two realms are completely distinct and one is just standing over and doing the technical stuff on one side, and then here's the political world, even though that, it sounds like, is the image of the world that the Fed is interested in creating.
No, precisely. I mean, I think one of the sort of implicit and at times explicit, but one of the kind of driving arguments in the book, and this is one of the ones that I sort of mentioned before that I really want political theorists to take away from it, is this idea that monetary policy is deeply political, but what makes it political, it is of course true that monetary policy has distributional consequences, and people have made that argument, and I think it's pretty much undeniable. But what I try and argue in the book is that politics is more than distribution, right? So what is essentially political in my view about monetary policy is that it is a key tool for shaping how we create and recreate the world around us, right? So what is built, what is studied, who goes to school, who's employed doing what? All of these things are impacted by credit and who has access to it and where and on what terms. And that's pre-distributional in a certain sense, right? That's a collective choice. And I think that you're absolutely right in emphasizing the fact that, so this idea that the Fed could act sort of apolitically in making those choices is, in my view, somewhat absurd. But I want to emphasize that the book is not an anti-expertise book, right? So the way I describe it to my students when I teach this sort of thing is, imagine you're driving like a horse cart, right? And the horses are pulling you, and all of a sudden they start walking in a direction that you don't want them to go in. Your natural reaction is not to like cut the ropes, right? So that the horses run away, because then you're stuck and you can't go anywhere. The proper response is to try and figure out a way to get them to walk the way that you want to go, right? To turn them, to reassert your control over them. And that's how I see the relationship between experts and the legislature, is that in a way we have fallen into a sense in which we are under kind of a rule of expertise as opposed to employing expertise, right? So the legislature should be employing expertise, listening to what's possible and not possible, listening to what people think is the best way forward and what isn't, but still ultimately asserting control over the decisions. And that's what we veered away from in monetary policy for sure.
That sort of flows into the next question I had, which is thinking about how we define democracy, or what folks are sort of locating as a central problem, if you will. So you write, for example, and this is a quote from your book, that contemporary dissatisfaction with democracy reflects a sense that voting makes little difference because the people one votes for do not exercise meaningful control over the bureaucrats they're meant to govern. And I think that this raises an interesting question, as I said, about how we define democracy, where people who are interested in democracy, small d Democrats, should sort of focus their critique. That critique could be of any political system. I'm thinking particularly within the United States, where when looking at the states from my perspective, the central issue, or how I like to define the problems with the U.S. political system, is this lack of universal and equal suffrage. And within that, I lump the unelected Supreme Court with lifetime appointments and judicial review that they've fully taken for themselves. The indirectly elected president with nearly limitless powers, it seems at this point, the malapportioned Senate and the gerrymandered House, the distorted legislative system. So I tend to put the question of sort of how we elect people before the question of what those people do after they are elected. So I'm curious if you think about this in that same framework, sort of how we elect them versus what they do after we elect them. And then maybe after that, we can get into this question of experts and expertise and sort of control the bureaucrats, if you will, which I think is a very big topic.
Yeah, no, it's a great question. I mean, I totally agree with you on the sort of huge importance of this idea of a lack of universal and equal suffrage. I suppose for me, the way I theorize it in the book, and I guess the way I tend to think about it is as sort of links in a chain of delegated political power, right? And so I think of political power as, sitting in the first instance in the citizens as a collective, and that them delegating that power in a certain sense. There's complicated debates in political theory on if such power can in fact be delegated, and maybe that's not actually the right word, but just for sort of ease of conversation, delegating that political power to the legislature, right? And then from the legislature that being delegated to the administrative state, and then in some instances in monetary policy, for example, it being delegated further to private institutions to actually execute policy. So I think of this as a kind of chain, and I think of it as quite unhealthy for a democracy for that chain to become too loose or to get disconnected, right? And so in the focus of my book really is that second link in the chain, right? From the legislature to the administrative state, and how when that erodes, and that sort of the strength of the power of the legislature over the administrative state wanes, you can have problems for the democracy at large, in part because it undermines the power of citizens if they don't no longer can reach that administrative state through the chain. And that's kind of the point of that quote that you read out. Now, that all that is to say that the first link in the chain from citizens to the elected legislature, to their elected officials, is obviously essential to a larger structure of a healthy democracy, in the sense of the entire chain working properly. And in the book, I mentioned that a few times, only to sort of set it aside and say that's not really my focus, despite the fact that it is essential to my broader picture of what a healthy democracy requires. And I mean, partly that's because that wasn't sort of my own focus, but it's partly because I just think that there is an immense literature in political science and elsewhere that just shows, like beyond reasonable doubt, right, that is broken in the United States, particularly when it comes to gerrymandering. I also think, which it sounds like you think, in the terms of the way that the Senate is apportioned, etc. But it's just, it's no wonder that people feel that their votes don't have real consequence if, when it comes to the general election in Congress, most of them don't, right? What is it? The statistics are absurd, but it's something like 30-something members of the House of Representatives actually face competitive elections at the general election, and that's just ridiculous. So I fully agree with that. I guess for me, I don't see it as a straightforward matter of prioritization, right? So because I also see them as quite linked, right? So this is related to the argument that I make in the conclusion of the book, which is essentially that some people will respond to my argument, which is a call for essentially more legislative power over monetary policy, by saying, why should we give the Congress more power when it's dysfunctional and full of, sort of extremists? And part of my response to that is, well, I think in a way, but the way that we have been engaging in delegation from the legislature to the administrative state, and that wildly unhealthy arrangement, in my view, has in part supported the development of Congress in this way, right? So if Congress delegates all this power away, so it doesn't have to make sort of important trade-offs and consequential choices, and instead can push those off on the administrative state, then it encourages a sort of a form of performative politics, right? A form of extreme politics. And and it becomes a vicious cycle, because once that performance starts, then people think, well, let's not give them any more responsibility because they're acting crazy, and so on and so forth. And you get this vicious cycle. So while I agree that the first link in the chain is immensely important, I also think that they are related in the sense of that I'm describing here, that the sort of state of Congress is impacted by the way that we engage in delegating political power to administrative agencies like the Federal Reserve.
Well, I think that's also how I tend to look at or respond to critiques of sort of giving the legislative branch more power. I don't particularly think that, well, if we just gave them sort of more power, that would fix the overarching, what I feel are just constitutional problems that we face. But one has to see any dysfunction, I suppose, within the legislative branch, not as sort of inherent to just a legislature, and seeing how our particular, in the case of the U.S., that particular legislative branch takes on these very weird qualities because it's within this larger system that's impacting it in various ways. So point taken, sort of seeing how those things are connected in that way. To continue perhaps within this realm, can we go back to that point around the comparison between the Fed and the Supreme Court?
Yeah, so it's often a question, right, of people will say, well, if you don't want an independent Fed, do you want an independent Supreme Court? And I think, in my view, I think there are a few things to say about that. I mean, one is, I think that there are plenty of arguments, against having the Supreme Court in the way that we do have it, against them having powers in the way that they do have it, et cetera, et cetera. But I think that, and in particular, arguments, very strong arguments, for an increased ease in changing the U.S. Constitution. But I think that it is important, even if one is engaging in that style of argument, to recognize that there are real differences between the Supreme Court and the Fed as currently constituted, right? So the most obvious one, but I think the most foundational and important one, is that the Supreme Court is itself a body named and created in the U.S. Constitution, where the Federal Reserve is not. And so sometimes there's discussions about how central bank independence should be permitted because it is a form of democratic self-binding, and it's the legislature deciding itself to pull itself away from a particular area of policy, to in a sort of open-eyed and good-meaning way, right, such that they can deliver better policy. But in my view, this is not the case, right? So the common analysis here is Odysseus or Ulysses, right? So bind yourself to the mast so that you can provide better policy. But the legislature, in engaging in central bank independence, is not actually binding itself to the mast, because it could eliminate the Fed tomorrow with a majority rule, or with majority vote, or it could overturn its policy with a majority vote. So it's not actually bound in a meaningful way. Whereas with the Supreme Court, of course it is, right? There's constitutional divisions of power that make things a lot more complicated there. And so I think it's important, when we're thinking about sort of requirements of self-rule, to notice that distinction. The other difference that people often will bring up, which I think I find a little bit complicated, because I think it is a distinction with a lot of gray space, but it's at least worth entertaining, is the one that is, the classic sort of, what is the point of the institution? If the Fed's aim, the Fed's purpose for being, right, is to engage in regulation, right, and supervision and rulemaking, whereas, of course, the Supreme Court, at least ostensibly, is meant to be doing, constitutional sort of interpretation, right? And so those two things, at least in theory, are quite different. One being by nature legislative almost, right, in the case of the Fed, because it's a delegated power from the legislature. And I think even if one eventually wants to make the argument that they can't be distinguished, right, and therefore the Supreme Court doesn't have is itself sort of engaging in a legislative practice, they can make that argument, but they have to recognize that theoretical distinction, at least from the get-go, and sort of motivate their argument that way. So all of that is to say, I think one could use some of the intellectual resources in this book addressed at the Fed to engage in conversations about the Supreme Court, but I think they are quite distinct conversations and would have to be sort of treated as such, if that helps.
Odysseus and binding oneself to the mast, and then how one, well, all that to say that metaphor comes up a lot in
Yes.
in a lot of these conversations.
Yeah, I
And
know. And
it
I
makes
find it
sense.
about you, but I find it frustrating because I find the disanalogy is really strong, right? So, as I say, the Fed isn't or the legislature isn't actually bound in the case of the Fed. I mean,
Mhm.
the other argument I point out in the book is, if we don't consider the length of time of the binding, right? So suppose we do imagine the legislature is binding itself to the mast.
Mhm.
Well, if the captain of a boat is bound to the mast for 20 years, right, then like, isn't that an opportune time for mutiny? Because the captain's capacities are going to have, plummeted, and the capacities of the crew are going to be on the up because they've been doing it for 20 years. So, the power dynamics that will occur in that case rapidly change. And then
Mhm.
last but not least, Odysseus, when he's bound to the mast, isn't doing anything. Whereas the legislature is trying to pass laws about all sorts of things, including things that interact and affect monetary policy. So I just find it a very difficult, it's an easy way for people to describe arguments in favor of central bank independence that feels very appealing. But when you start pushing on it in any sort of thoughtful way, I think, or any sort of serious way, it starts to fall apart, in my view. In the book, one of the main critiques I have of the arguments in favor of central bank independence is that it focuses exclusively on the formal powers of the legislature to engage in monetary policy steering, right? So, as I was saying, in theory, Congress could vote tomorrow to tell the central bank, to tell the Fed to do something differently or to eliminate the Fed. But part of my argument is that as a result of choosing to disengage with monetary policy for such an extended period of time, right, to support central bank independence, the legislature's effective power, right, its effective capacity to do that, to engage on a regular basis, has waned. And so it's not just about sort of formal legal capacity, it's also about kind of practical capacity.
Mhm.
And that's important to talk about in this story, I think, for sure.
Getting to what might be a better way to do things, how do you imagine a country governing the creation of money as if democracy mattered, which I think is how you put it in the book. I like that formulation. How would that look?
Well, relating to what we were just talking about, where I start theoretically is this a suggestion that to have a kind of healthy democracy that persists over time, you have to have legitimate institutions that are held accountable, but you also need to maintain the effective power, not just the formal power, but the effective power of the legislature to steer policy over time. So that doesn't mean that Congress needs to be making every single choice about monetary policy, just like it doesn't make every single choice about education policy or immigration policy or environmental policy. But it does mean that it needs to maintain a balance of power such that it is the legislature that is sort of calling the shots and dominant when it comes to monetary policy, as opposed to the central bank. And so the way I suggest achieving that is that in order for the legislature to maintain that effective power, it has to know and regularly show its power over the central bank over time. And so I give two potential sort of institutional suggestions for mechanisms for how that could work. And one is a way for the legislature to regularly reassess and publicly either affirm or change the way that the central bank is using existing tools for monetary policy. And this is what I refer to as annual credit guidance. So it's almost akin to the budgetary process in the sense that, so usually on an annual basis, the legislature engages with the administrative state through the budgetary process. That doesn't include the central bank because, of course, the central bank can create money, so it doesn't have to go through the budgetary process. So this would be a way for that kind of annual influence to happen. And essentially, I give details in the book of how that could work, but I develop a suggestion for the way in which the legislature could comment on the way that the Fed is regulating money creation. And it's designed to do it in a way where the legislature could say nothing, i.e., they could say, you're doing a great job, keep going. Or they could say, here are a few tweaks to how you're doing it, right? We want a little bit more credit in this region, a little bit less in that sector. Or they could give quite extensive instructions about sort of what they want to see more of, what they want to see less of, et cetera, so on and so forth. And I also talk about the way that the Fed could use those instructions to actually operationalize that in the economy through some I use an example of differential asset-based reserve requirements, for instance. But that's the sort of annual credit guidance picture. The other way in which I imagine the central or the legislature being able to know and regularly show its power over the central bank is a way in which they could comment on not just the way the central bank is making policy, but also the structures of the central bank. So, the way I describe it to my students is if you think about a system of pipes, for the city that to deliver water. So you would want to be able to consider both how the water is sent through the pipes, at what time, at what flow rate, how much, but you would also want to be able to consider the pipe system itself. Are there new neighborhoods that need more pipes? Are there neighborhoods that need less pipes? Do some need to be changed or, refitted? And that latter example is what I'm thinking about here with regularly rechartering the Federal Reserve. So that would be the legislature reconsidering the whole way we do monetary policy, the institutions, on what basis, in what manner, and that would be at a longer time length, right? So traditionally in the U.S., the first central bank of the U.S. and the second central bank of the U.S. had 20-year charters. It could be something like that. It could be slightly lower, 15 years, something of that sort. And the idea would be to have debates about sort of, is it right that the 12 regional reserve banks are still privately owned and have such a big influence in the leadership? Should they instead be public regional investment banks? Should we be focused on price stability? How should we define that, et cetera? Just lots of these sort of more structural conversations would hopefully be had through that process.
From a strictly pedagogical standpoint, I like the way that you use various analogies or descriptions to describe these things to your students. I think that's very helpful to sort of unpack, to help folks see not just the sort of details or the finer points, if you will, but to really step back and ask, why are these institutions structured this particular way? I mean, I think that obviously applies not just to the Federal Reserve and the world of monetary powers, but all of the large, powerful political institutions we have. We can really focus in on, well, how do they work? Who are the people doing them? What's the outcome? Do we like the outcome? So on and so forth. But then to step back and say, well, why is it structured this particular way? Why does it operate within this particular theory of democracy or isolating power or decision making or so on and so forth? I think that's really important too.
No, I agree. I mean, I think it's striking to, if you asked the average student or the average citizen who knew nothing about the details of the Federal Reserve, as most people don't. I mean, why would they? Obviously there's a public body in this country that regulates, banks and private bank money creation through banks and how banks give out loans and, that kind of thing, and to whom they give out loans, et cetera, and on what terms. What do you think that organization looks like? Nobody in the world is going to say, 12 banks in the cities where they are, owned by who they are, done in the way it is, which isn't to say that it doesn't work or we should change it, right? It's just to say that, in my view, that's a reason to go back and study the history of these institutions. How did it come about in the way that it did? And then think about the way that power has been sort of allocated over time. And that's where I think the real problem is with the Fed.
I think it can be helpful, at least when looking at U.S. political institutions, to compare how things are done in the U.S. to how things are done in other parts of the world, which isn't necessarily to say that there's some solution that has been found that we just need to copy, though I think there are things to look at that are admirable, especially compared to how it's done in the US, but also to just make strange or make seem weird, perhaps, how things are done in the US or a particular country. I was curious if any of that applies to central banks, more monetary institution there. Are there things that you look to in other countries?
It's a great question. I do it slightly differently in this case. That's because pretty much since the 90s, central banking and the way it's done has been pretty universally adopted around the world. Not universally, but very widely adopted. And part of that is intentional, right? So there's an institution called the Bank for International Settlements, which was founded in the interwar period. which is a mechanism for central banks all over the world to essentially coordinate policy, get together and talk about things. And to some people this sounds like very sinister, right? So and like people, the central bankers getting together and making all these choices, and I think there's probably a degree of that is a bit problematic. I'm not sure sinister. But on the other hand, we live in a world of completely globalized financial activity, right? And so it would be ridiculous for central banks who are both regulating and undergirding that, right? So particularly in the case of the Federal Reserve, not to be coordinating, right? So as a result, and then in addition to that, you have organizations like the IMF and the World Bank, which have very strong views about what the best way is to run an economy, particularly when it comes to central banks and central bank independence. So central bank independence and a sort of basic shared structure and approach is very widely shared around the world. That said, I think the more useful comparisons come when you look historically, because it's actually a relatively new phenomenon. And there's some very interesting examples of central banks in the past being much more involved in political decisions, and the political bodies being much more involved in directing central banks and in credit policy. And that's true very widely, right? So Eric Monet, who's a economic historian, has written a fantastic book on post-war France that gives a really detailed example of this. He's also written a much more sort of broad and slightly less sort of detailed historically book on this in theory called Balance of Power that came out recently in the US. He gives some great examples. Even the US, right, in the sort of war and post-war period, there was much more involvement and exchange between fiscal and monetary policymakers. And then beyond sort of broader structural comparisons, you can look at smaller things. So like, for instance, India has a very interesting practice, I think, that we could learn from, of requiring private banks to lend to certain priority investments, right? And those priority investments change regularly and can be sectors, they could be regions, they could be types of people, etc., which is quite an interesting approach. And then you can look at things like technical structures. So, for example, the Bank of England is very widely considered a sort of canonical independent central bank. It got its independence in 1997, and it is very independent today. But despite that, every year, the chancellor, who is effectively the treasury minister, writes a letter to the Bank of England saying, here's what we want you to do this year. Now, it's mostly sort of formality, but it's obviously a way in which the legislature could engage in more instruction of the Bank of England. In the case of the European Central Bank, things are way more difficult because it was created by international treaty and is like so it is the closest thing to we have, I think, other than South Africa, to a constitutionally independent central bank, and would be immensely difficult to change. And then would even have the question of, if you want to introduce more political control, what sort, right? So does that then come from the European Parliament, in which case you're entering into a world of sort of approaching fiscal union, which has always been a big sort of bugbear when it comes to European integration. So that's a very difficult case, but can be a useful one in thinking through sort of what we think about central bank independence more broadly.
I would imagine that the US has a large role in all of this, given how central the dollar is. So, I have written down here, how does US monetary policy have global implications? That's a vast question, which you've already answered in various ways. But I would imagine that one can't talk about any of these decisions, even made by other countries, without considering the US and perhaps the Federal Reserve.
No, I mean, absolutely. I mean, there's, of course, the direct and immediate impact of US monetary policy choices on other countries in terms of, their access to dollars, the relative attractiveness of investments, monetary flows, interest rates, etc. And then there's market impacts, of what the US does can frighten markets or it can secure markets. There's all these different things. But I think perhaps most important and least talked about in sort of popular discourse is the euro dollar market. Right. So euro dollars are US dollars that are created offshore. So not only in Europe, even though they're called euro dollars, they're just dollars that are created and deposited anywhere that's not in the US. And essentially, they're US dollars that aren't under the regulation of the US government. So they're very attractive to investors because you get the dollar, but without the strings attached of someone being able to regulate you in particular ways. And they were really encouraged. The Eurodollar market was encouraged and promoted by the Federal Reserve itself, sort of in I want to say the early 60s. And then that market was really secured in the 70s when there was a bit of worry about the US's willingness, and in particular the Federal Reserve's willingness, to back up the Eurodollar market if something went awry. And in 74, there's some really good work on this by Ben Braun, Stefan Murau, and I'm forgetting the last co-author, I apologize, but they wrote this fantastic paper where they went into the archives of the BIS, the Bank of International Settlements that I was talking about before, and read all the communiques and the sort of exchanges about this moment and how the decision came about where the Fed essentially said to the international market, don't worry, if something happens, we'll help you out. And as a result, the Eurodollar market completely exploded and is absolutely massive. I mean, more dollars are created outside the US than inside the US by a lot every year. And as a result, we've got this huge international financial system that runs on the back of both dollars in the form of euro dollars and US treasuries, which is another matter that we can discuss if you want. But the whole point is that as a result, the Federal Reserve is the institution that is meant to regulate the creation of US dollars. And so and back up any liquidity issues in US dollars. And so if it makes decisions about how to do that, it can have huge ongoing impact. So currently, the Fed doesn't engage really in any regulation of Eurodollars. That hasn't always been the case. In 1990s, it had reserve requirements for Euro banks that held Eurodollars, etc. And it could seek to regulate them more strongly. That would have massive international implications in the financial markets. So yes, big time global impact for all of this. And I mean, part of my argument, right, is that that is a sort of interesting, I think at least, argument, is that if you really care about domestic democracy and domestic democratic power, this is a problem, right? Because essentially what you have is a domestic policy organization, the Federal Reserve, that is really focused on an international jurisdiction, right? It's thinking about dollars. It's thinking about dollars, whether they're here, there, or over there, right? And so if you want to empower the domestic legislature to make choices, you have to, about monetary policy, that would have an impact, quite an intense impact on the Fed's capacity to backstop the international financial market in the way it's currently constructed. So if you wanted to do that, you'd have to take some serious steps in changing that and signaling to the Eurodollar market that the US isn't going to back it in the same way or with the same latitude that it has done since the 70s.
Those are a lot of very impactful and important decisions that you're describing. I feel like the atomic bomb was mentioned earlier in our conversation. I don't remember in what context, but the idea of really important, crucial decisions being made, things being formulated, constructed, and it being done in pockets of the world that just don't exist to most people. It's just not a part of people's lives. They perhaps know that there are very important things going on, but also know that they don't really have a say in those things. So all that to say, I feel this real desire to try and bring, if something is just to say it as such, if something's very important, I feel that it should be brought in as much as possible to the participation of as many people as possible, that as many people as possible should have some say in it, which I feel like is very much in the spirit of your book.
Yeah, no, I think that is the sort of driving sentiment of the book, which is a sort of is I feel a sort of at base a democratic idea that, right, if something is this important, and in my view, I mean, we haven't talked about this as much, but in my view, money in general is is a foundational power of the state, right? And so if you have a democratic state, it in particular is important to have democratic power over money creation. And so in that, when you start going down that argument, it seems pretty clear that to have like a sort of healthy democracy and monetary policy as if democracy matters, then you need more domestic control over monetary policy. And on the one hand, that feels very democratic because it feels as if you're taking away control from a sort of decentralized governing structure that has been supporting sort of a global financial economy for a long time. And that feels pretty clear. On the other hand, it's complicated, right? Because if you want to sort of bring the power of a monetary policy back into domestic control, in order to make it more democratic, you're also pulling away power from sort of international organizations and agreements that arguably, and I do think it's arguable, but have traditionally been thought of, especially in sort of liberal democratic scholarship, as supporting democracy globally and the rights of humans globally and trying to bring people out of poverty and bring democracy to more people, more citizens around the world. And so there is tension in that argument. Obviously I came down on sort of one side, at least to a degree, gingerly in the book, but it is a difficult, I think, balance to strike. And it emphasizes the fact that making an argument into favor of democracy is inherently requires a degree of risk acceptance, because the point is that you cannot guarantee what's going to happen, right? You can empower a group of people, but you don't know that they're not going to make bad choices, and you don't know that if we empower this group of people by democratizing monetary policy, if I can put it that way, which I tend to avoid, but in the United States, that won't cause problems for all these other countries around the world. Now, people will say the international arrangement we had previously wasn't great for lots of countries, or that we have currently. A lot of people suffer immensely, but other people will point out that global poverty has dropped dramatically in the last, however many years. And so it is, I think, to some degree, it ends up being a question of sort of risk aversion and your imagined future, right? Do you think this change is likely to lead to better futures or open the door to worse futures? And I don't think there's an obvious answer to that question. I don't think, there's a right or wrong answer to that question, but it is, I think, the question that you have to face in this sort of instance.
I was curious in what direction this conversation is going these days, at least here in the States, around the question of democracy, political structures. I think there's a lot of questioning as to how things are going, how things are done, if things need to change. And so curious if in the world of monetary policy, there also seems to be a questioning, perhaps, of what had been done in the past and what could be done in the future, perhaps even an element of, well, we know that things might need to change, but it's really hard to give up on what currently exists. How you see that conversation playing out?
It's definitely an active one, right? There are not many periods of my life in which people have been like average people have been actively interested in the central bank or monetary policy, but that does seem to be happening at the moment. Part of that is obviously because in the US in particular, there's been, active tension, right, between the administration and the central bank. And that's been publicly discussed. And then there's also, Supreme Court cases about the power of the administration over the administrative state more broadly. And some of those cases have been particularly interesting to people interested in the central bank, because courts have been at pains to single out the central bank, right, as different from the rest of the administrative state in some cases, right, to say, okay, well, we could give the administration more powers to fire members of multi-board agencies, that run multi-board agencies, but the central bank is different, right? To try and maintain that independence. And I mean, my view on it, and I've written a few pieces about this, is essentially to say that we have to be careful about what conversation we're actually having, right? So I think there are lots of reasons not to want Donald Trump to be singularly in charge of monetary policy. Some of those might be, personal partisan reasons, right? So like personally probably wouldn't support the policies that he would want to enact with that power. But that's not a structural theoretical argument for or against, central bank independence. Furthermore, you could make a theoretic argument against giving Donald Trump more power over the central bank because he's the president and not the legislature, right? And the president traditionally in the US Constitution, the power to create money and regulate the value thereof was given specifically to the legislature. And that was done intentionally in order to prevent a single individual from having the power to do that because it was far too much like a king, right? And so we wanted to give it to the legislature, and that's where it went. And then the legislature delegated it to the Federal Reserve, okay? So in my view, if you're really serious about this kind of stuff, you can make an argument against central bank independence. That's pretty much what my book does. But if you're serious about, structuring monetary policy as if democracy matters, you're not considering giving it to the president. You're considering giving it to the legislature. And you're certainly not considering giving it to a specific individual, right? So it's not about who is the president at the moment or who is in the legislature at the moment. It's a more broad structural argument. So, I feel complicated about the conversation because it's very interesting in the sense that people are actually engaging in questions about should things look differently, who has the right to choose, what should they be doing with it. But I also feel sometimes frustrated by the conversation in that it's not sort of more tuned into what are the real stakes of this argument? And the other thing to say, I think, is you do often get some of these very, in my opinion, stale defenses of central bank independence, like I mentioned, this New York Times article trotted out and, said, well, no, we need to maintain central bank independence because of expertise, because of blah, 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 and the other stuff, time and consistency. And in my view, I'm sort of like, these arguments are really not good arguments. They're not compelling. They're not sound, right? So if what you're saying, person writing this article, is that you don't want Donald Trump to be in charge of monetary policy, fine, then say it. Make the political argument. But what you're hiding behind a theoretical argument that is not strong and shouldn't be used to defend your position. And I worry a little bit, especially like it's something I think I've seen some in the UK, is that people that oppose Trump will assume that the answer is to come close to sort of institutional and traditional status quo institutions. So in the UK, for instance, the Labour Party thought that the truss situation over here was a disaster. So as a result, they are binding themselves very tightly to the OBR and the Bank of England and these sort of technocratic institutions that they see as sort of the bastions of kind of liberal technocratic governance. And I think that is a mistake.
I think that a reaction to Donald Trump has been in some parts to say, where's the institutional defense, now that Trump is coming in and changing things and pulling all these things apart and so on and so forth. Okay, time now to really clamp down even harder on the tried and true institutions to save us or get us out of this mess. As if, in my opinion, those things didn't have a role to play in how we got to this particular spot.
Yeah, no, I think that's right.
Well, Leah, thank you so much for coming on and talking with us. And I hope certainly opening up a little bit of a door for me into this world and connecting lots of different things into this discussion of democracy and who makes important decisions, how important decisions are made. If we have these democratic values, what does that say for other institutions or for just the larger institutions that we have? So I'm sure this is just the beginning of the conversation in many ways.
Thanks very much for having me. It was a great chat.